Hello everyone, welcome back to the channel. Matt with Green Bar Trading. Welcome back to another weekly watch list video where we will go over everything that you need to know for the upcoming week in the stock market. So hit that thumbs up for me, that like button. If you're new, consider subscribing. So let's get right into it, and we're going to start with our earnings for the week. So these are all the companies that have earnings on the week. If you're interested in trading any of those, just keep in mind that trading around earnings is difficult, and you will be paying up in premiums to take these options contracts. All right, so that's the earnings for the week. Sectors performance on the week, on the day, on the month. We want to see what has been catching a bid and what has been selling off. Just so we know where those hot areas in the market are, it's just good to know, because this is something that I pointed out. It may have been in our last weekly watch list video or one of our live streams in the morning. I can't remember, but energy on the year has obviously been outperforming a lot. All right, you can see here, clear as day. It's up 42% for the year, which is just a massive, massive outperformer. Year to date, 46%, okay? Just a huge, huge outperformer. But what we've seen happening is it's starting to fade just a little bit, okay? 3 month, 5.5. This used to be a lot more. Financials is starting to catch up. Healthcare starting to catch up. Even technology has made a little bit of a rebound. And then on the 1 month right here, you can see that energy is falling down to the bottom of this 1 month relative performance. The Dow industrials, materials, financials, utilities, these have all been huge, and that's why the Dow Jones industrial average has been outperforming the S&P and the NASDAQ. So just keep in mind, on the week, utilities was up huge, and energy was the only sector in the red. Not by a lot. It was a very short week, so I'm not taking much of what happened last week into account because volume was just very low. All right, so those are the sectors. Looking at the economic calendar, this is something that we don't ever want to miss. Always watch what is coming up for the week ahead with the economic calendar. So on Monday, it looks like you have a Fed president speaking at noon, so that's something to definitely, just keep an eye on. Tuesday, a couple of home price things, consumer confidence, nothing crazy, but then it starts to get really, really interesting. So on Wednesday, you have a jam-packed day. On Thursday, the PCE, one of the Fed's most, oh, I should go back. Hang on one second. Totally forgot. At 1:30, Powell is speaking. All right. I don't know why I just went through that really quick, but at 1:30 you have Powell speaking. At 2 p.m. you have the Beige Book. This will move markets. All right. This is not a week like last week where we had nothing going on. It was beautiful. This is a jam-packed week. So that's on Wednesday. Thursday, PCE. Like I said, the Fed likes to look at this one really in depth for inflation. So this will move markets. That's on Thursday. And then Friday. We thought maybe it would get easier. No, it does not. You have the payrolls out at 8:30. This is a huge, huge week. All right. The jobs numbers is just a massive, massive thing that the Fed looks at. All right, so you have that here, 200,000 expected. Unemployment rate 3.7%. That's what's expected. We'll see what happens. All right. It's very hard to predict these things, so we can just wait and see. If we're trading this week, I expect volatility to definitely get up there because there's just so much going on. All right, so that's the economic calendar. Looking over at the bonds, I want to show you guys the 10-year. The 10-year for the last month hit its peak and has been selling off the yield, which means that the underlying bond has been going up, but the yield has been going down. All right. When the yield goes down, what have we seen? Come over here, click on comparison. Let's look at what the Dow Jones has done in that same month. You can see this negative correlation, right? One thing's going down, the markets are going up. The markets have been liking the fact that the 10-year has been going down the yield. So you can see here, the market's going up as the yield's going down. Now, the NASDAQ has definitely underperformed the rest of the market. The Dow has outperformed, but as I'm going to show you guys in a second on the charts, I think it's a little overbought. All right, so that's just the Treasury yield, something to keep an eye on. It's down 10% on the month. That's a very, very big move for the Treasury yields. So that's just something else to keep in mind. And I want to show you guys something. So as we see the market kind of, going up, going down, the market is based off our emotions, traders' emotions, when something's oversold, overbought, sentiment. This is all a very big factor in market structure. All right, so at the moment, and I'm going to show you guys here in a second. At the moment, this is what I like to look at: the bulls and the bears. Right? This is something I'll show every so often. Now, it only shows the last 3 weeks here. So November 8th, the 15th, and the 22nd was the latest reading. Before that, we were seeing numbers on the bulls that historically have really always been an area to buy. So lower bull number, it's a contrarian indicator. A lower bull number, and that was really the bottom of the market. And that's a good time to buy when sentiment is so low. Nobody wants to buy. Everybody's afraid. You know who was buying? Warren Buffett. All right? That's the way investing works. Emotions. It's a roller coaster. So when something gets so oversold and looks like, I don't want to touch this thing, that's when you should start nibbling, build a position. You don't have to go all in case, it comes back down and still pulls on back. But that's usually a good time to buy when market sentiment and emotions are at all-time lows. All right, so what we have been seeing is now the bull number is starting to increase a little bit. All right, and you see that with the stock market. So now people feel good. All right, so that's just something else to keep in mind. Market sentiment, market structure is very, very important. So going over to our compass. Now we're going to get into the charts. This is the SPY. All right, we saw this 390 area held up very good, but then we kept banging our heads into that 4,000 mark. We finally broke the 4,000 mark here this past week and closed over it. Now you can see this orange line is the 200 moving average. We're getting very close to that, all right? This downtrend line for the year, we're getting very close to that. You can see right here, the orange line, that's the 200 moving average. Same thing, right? This is the SPY. This is just the ETF for the S&P 500. Downtrend line, 200-day. Everybody on their charts has this exact same thing. It's just something to be aware of. Will we reject this area? It's possible. It's also possible that so many people start shorting here and they end up getting squeezed out if we see those institutions really, thinking, okay, the bottom's in, let's just blow this thing through, which is also possible. I think it's more likely that, maybe if we do break this a little bit, we do end up coming back down. Overall, I think that the market is just not priced in enough of the recession fears for next year, for 2024. So that's just my bias, but I like to trade what I'm seeing, and what I'm seeing is a nice rally, right? Very similar to back here in the summer, pulled on back, same level, and then bounced. The 20 EMA crossed over the 50, the 20 EMA crossed over the 50, and we see that nice move higher. So the chart is telling me that this looks nice for a breakout. This is just something to be very aware of. All right, there's going to be resistance here. There's going to be a lot of resistance at 4,100, and 4,100 on the S&P 500 is right here. Just about at this downtrend line. All right, so that's just, something. If we have 75 more points to go before we see a huge rejection, how many people are really going to go long, or are they going to wait for it? These are just things that we need to just be aware of. So that's the S&P 500. Now, looking at the Qs. The Qs have done really nothing special, all right? It's kind of just, still trading in this range for about 2 weeks now. So, very light volume, like I said, and obviously on Friday we closed at 1 o'clock. That's why you see this type of day. That type of day. A lot of people took off, including myself. But yeah, that's the Qs. Nothing really spectacular happening there. What's really nice looking is this chart. Now, the only problem is, look at the RSI. Every time the RSI gets to this level, we see a sell-off. And same thing goes for down here. When we were oversold, we saw a bounce. Now we're overbought. There's definitely a possibility that we can see a move down from here. It did consolidate and it did break out, but like I said, last week was not impressive to me because it was on such light volume. So just keep that in mind. If you break out on light volume, there's a possibility that that's not really very strong. But the chart does look good. Very nice bounce from the bottom. So we have the bottom down here to up here, 20%. Basically a 20% move from the bottom, and that's where we're sitting right now, just about to the penny. So that's the Dow looking strong, but looking overbought. This is the IWM. We got to bring this back to the 3-year to see the top trend line, and then back here. We saw this last week, rejection. Now we're coming back exactly to that trend line. All right. Is it setting up for finally a nice break of the trend line? It's definitely possible. And then the 190 would be the next level there. And that's on the Russell. So that's the IWM. So that's all our major indexes. Want to show you guys the yields on this chart. Looks like they're rolling over. I showed you guys this kind of a head and shoulders pattern in last week's video, and we're starting to see that sell off in the yields. On the dollar, the same thing, broke down, kind of bottomed out a little bit, but this is looking weak too. So if this continues to come down, that would be really good for the market. And same thing for this. If this continues to come down, the only thing is the 10-year Treasury yield, when the yield drops, the thinking out there is the overall economy is weak, which is not great for the stock market. But when you get that, inversion, like we see with the 3-month, the 2-year yielding so much more than the 10-year at this point, that's really a very clear sign that the market is trying to tell you that the future, the economy, is definitely going to be weak. So just keep all that stuff in mind. Going back over to the charts now, I want to look at a couple of things. I'm going to start with XLE. This was something that we posted last week. I was holding a position going into Monday, had a huge gap down on my contracts. I took puts and had a very, very nice trade here. I know a lot of people in Discord also got a piece of it. So that was nice, but we bounced, got rejected again. This is a very tough spot to break through. And like I show a lot of times here, this is the head and shoulders pattern. You have a shoulder on the weekly, you have a head and then a shoulder. This is at the same spot as this is. There's a lot of room here to pull on back. So if we keep rejecting right here on the daily chart, the possibility of a pullback is definitely possible. As you can see here, it's consolidating, but there's not enough buyers to break this out at the moment. And this is a false breakout here. So keep XLE, the energy ETF, on watch. XLF. On Friday, on that tiny little trading day, we broke this resistance line. I don't know if this could be a good time to possibly get in short, as this was on light volume. So keep this in mind. This is a sector, though, that has shown a lot of strength. So you have to be careful. Let's see if we can get a breakout. Maybe it does break out. But that's why XLF is on my watch. I want to see how this thing opens up and trades on Monday to see what direction I would be looking for. AMD, we pointed this out last week, this downtrend line. Well, what do you know? It rejected again on Wednesday, and then on Friday, just had that little tiny day there. All right, so this, though, to me, is looking like a cup with a handle pattern. A lot of times these cups and handle can lead to a nice breakout. But in order to get that, you would really need the Qs to also break out. But just keep in mind, there's your trend line. So you want to wait. See how it broke this, but then closed under it? That's a false breakout of that trend line. But it's definitely consolidating. This is a nice base and then a nice move. It got back here, so it retested, came back up. It is looking pretty bullish at the moment because of this pattern as it holds up here, but it's got to break. It's got to break that trend line. Couldn't do it back here. See, all these trend line just could not do it. So until it does, you either want to wait or maybe take puts here. Just watch what the overall market is doing, though. All right, so that's AMD, and then Tesla. Now Tesla, I have a bunch of levels here. I'm going to get to that in a second. But what we had shown was there was a very good possibility in last week's video that you were oversold. We can see a bounce. All right, you got your little bounce. These bounces have not lasted long. All right, So now looking at it on the 30-minute chart, I'm going to show you why these lines are so important. So looking back here, this was support, right? And then resistance, resistance, right into the pre-market for a huge gap down, all right? And then this turned into support, and then this was resistance, big pullback. And then it started to bottom out. You can see here 2 days in a row, all of a sudden, wait a second, and then it starts to pull back up. And this is where we were saying to get long. And that's what happened. This led to a lot of nice opportunities in Tesla on Wednesday and on Friday. You can see here what was acting as resistance in the first part of the day, broke through that, and then our key level, just about to the penny, was hit on Friday. So a good time to get long, play for a bounce, and that happened there. This trades very technically. You have a lot of day traders trading this. So these are levels that you're going to want to keep on watch. And this was a nice, pullback here. I'm sorry, not a pullback. This was a nice little rip here. But on lower volume, we saw that on Friday. So we'll see what happens, but I'm going to be watching this level here, so the 185 area, and then on the daily chart, yep, that's a key level there. You can obviously see, and just on the daily chart, just keep in mind these bounces have been pretty small. So just, keep an eye on it, see if it doesn't break through this level to take it short. Maybe it goes back down, for that next kind of leg lower. All right. As we just saw 3 trading days ago, it hit its low for the year. All right. So that's Tesla. And I think that's going to do it right there. So hit the thumbs up for me. Thanks for watching as always. And I'll see you on the next one. Take care.